Hey guys, and welcome back to a new accumulation zone trade recap. Today we're gonna up the game a little bit by also implementing the DXY with our pound US dollar strategy. It's not specifically for the pound US dollar. You can use the strategy on any asset you want. I would recommend a very highly liquid pair, for example the Euro US dollar, pound US dollar, US 30, the Australian US dollar, where you don't see so many wicks, where the wicks basically don't stop you out all the time. And also pairs with low spread, that's always in your favor. So if we get started with Monday, we are basically looking at the price action right here. We're using the Scalper Pro indicator with basic settings. If you don't have access to the Scalper Pro yet, there's a link in the description for a 10-day free trial for the Scalper Pro indicator. We're using the stochastic RSI with these settings right here. And we're also using the DXY right here. So I'm showing you how you can add the DXY to your chart. You simply click on this compare or add symbol button right here at the top left. Then you add the DXY to a new pane. And now let it load. We see a line. So what I'm doing right here is I'm actually going on the style section on the DXY here, and I'm selecting candles. And to make it also a little bit easier for ourselves, I'm inverting the scale to now be able to compare highs with highs and lows with lows, because the DXY has an inverted correlation to the price action that we see on the pound US dollar, because right here the pound is measured against the US dollar. So let's use the DXY to actually confirm signals. So ideally we would like to see a bearish divergence for our signals, but a normal confirmation that the DXY is currently lining up with what we see on GBPUSD is already good enough. Alright, so we get started with this first trade right here. We open up during the London kill zone. We had our stochastic RSI crossover right here, but we are still above the VWAP, this blue line here, from the Session Pro indicator, also a free accumulation zone indicator. Alright, so we get a bearish engulfing candle, quite a big candle, actually a 17.6 pip candle. I usually don't like to enter on big candles like this, but the take profit target for a 2-to-1 risk reward would have still been within the Asian range. So this would have been a valid setup that I actually took live. So it ended up as a losing trade, but it's all part of the probability game. And now what we can basically do is we first of all see divergence on the Scalper Pro. So we see the Scalper Pro making a high, and at the same time also the pound US dollar chart. But if we continue, we see that the Scalper Pro actually continued making two lower highs compared to what we see on the price action chart on GBPUSD. We see that the British pound made higher highs. So this would confirm a bearish divergence idea that this might actually continue further to the downside, especially since we already took out the Asian kill zone highs. Alright, and if we now double check on the DXY, we also see that the DXY made higher highs. So everything's still lining up. We don't have bearish divergence on the DXY. If you, for example, see the divergence on both the Scalper Pro and the DXY, this would be a very great short signal. But this is not part of the basic strategy rules. So I'm just showing this out to more advanced traders that actually like a little bit of more confluence, especially when trading US dollar, the DXY dollar index, correlated pairs like the GBPUSD chart, the Euro US dollar chart, Aussie US dollar chart, USD CAD chart. Of course, the USD CAD chart, you wouldn't have to invert your scale right here because it's not inversely correlated. Alright, so now if we continue, we see that this trade actually got stopped out at our stop loss. So this is an overall 1% loss for the day here on Monday. But if we continue, we see that on the Scalper Pro, we actually get a bearish divergence confirmation, meaning that this high right here made a higher high on the Scalper Pro, but a lower high right here, whereas on pound US dollar we continued making higher highs. If I'm dragging out this line, we continue to make higher highs, while the while the Scalper Pro basically confirmed lower highs. So we already have that divergence in place. So taking a long trade right here on this bullish cross is less likely, or is a lower probability setup than the setup we saw right here, where we actually had the bearish divergence confirmed. Now if we also bring the US dollar index, the DXY, into this equation, we now see that from this high right here, corresponding on the DXY, we also continued making lower highs all the way up to this point right here. So what's your bias now? We're above the Asian highs. We have bearish divergence confirmed on the Scalper Pro. We have bearish divergence confirmed on the DXY. Wait for a break below the VWAP if you don't like this bearish engulfing entry right here for a continuation move lower. That was an easy entry opportunity for a possible 50 pips scalp to the downside right here on British Pound US dollar. Not saying that you're selling here and closing the trade all the way down here, but grabbing 20 pips out of this move to the downside within this, let's say, poor London kill zone was very easy. All right, let's continue. So during the New York session, we didn't see any divergence to the DXY. We continued making higher highs and higher lows, pretty similar to what we saw on the price action chart here. We also did not see bullish divergence on the Scalper Pro, so we could have simply entered long on this trade as soon as the market pulled back, for example right here out of this consolidation with the crossover right here on this candle, the stochastic RSI crossover right here for a continuation setup long. We also already got our first bullish crossover, but in my opinion, I would have liked to see the market retrace a little bit lower after this consolidation. But because it's a New York session, you would have to give it a little bit more room for its stop loss. So let's say we entered here, placing a stop loss right here would only be 10 pips. And for a New York kill zone, a 10 pip stop loss most of the time is too small. So I would give it at least a 15-point stop loss, if not even more, just to have a little bit more room for this consolidation range that already formed up till here to continue stay within the range and maybe take out those two lows. And that's all risk management basically. If you would have waited for a confirmed setup for example the stochastic RSI lines to cross back in above the 20 level, you would have received your entry right here on this up close candle with the wicks to the downside, a great sign. So let's do it again. Let's go for a 15 pip stop loss. We are targeting a 2-to-1 risk reward ratio, which would have been hit very easily. So overall, this was a pretty great and trendy New York session, but we did not see any divergences. So overall, this was just a regular Scalper Pro stochastic RSI strategy entry. If we continue now to our next London kill zone, we see, because we had CPI news coming up on Thursday this week, we saw a consolidation during Asia, almost a very similar consolidation here during the London kill zone, a continuation drop further to the downside. Also, I don't think with any divergence confirmation, if I'm not completely wrong. We went above, the only divergence I see is by comparing the Asia highs to the London highs. So we see that the Asia highs haven't been taken out on this day. And on this day, that was actually my target. I think I entered right here on the trade opportunity. Here we closed above the VWAP. We had our stochastic RSI crossover, and I really wanted to see the market taking out those Asia highs. So I had my stop loss right here on that close of the candle, and my 2-to-1 risk reward ratio profit target was up here, just slightly above the Asia highs. My first entry on this day I took based on, hang on, let me see, I think on this down close candle, which also stopped me out, so another losing trade, but that's all part of playing the probability game. For a 60% win rate strategy, that also means that you're gonna lose 40 trades out of the next 100 trades. So that's all part of the game, but overall you're still gonna be profitable. There's no such strategy that allows you to win 100% of the time, especially if it's indicator based. Alright, so what we see here, going back to the Asia high, we see that Asia high being represented here, and on the DXY we actually took out those Asia highs right here. So again, now we would have a confirmed divergence. We could check on the Scalper Pro as well, and we see that we did not have this divergence on the Scalper Pro. So overall just a simple DXY divergence. We consolidated up high before the drop further down right into the New York kill zone. So this indication that we formed a higher high during the London kill zone based on the Asia high that has been formed on the DXY, and same for the British pound US dollar that has not been broken here on this chart, could give you the indication that the DXY has been manipulated above the Asian highs, and now we have that bearish divergence that could fuel our trade further to the downside. Alright, let's continue. The New York kill zone, like mentioned before, with the CPI news on the schedule, was not ideal to trade. We see all those wicks here, those continuation wicks. For a short entry right here, in my opinion, we were just simply too far away from our VWAP, our medium price line. We also did not see a steep increase over that whole day. The VWAP basically stayed around the same price level for the whole day, even going out of the New York kill zone. So overall, not ideal trading conditions. This trade would have at least triggered your 1 to 1.5 risk to reward ratio, signaling you that you can trail your stop loss down to break even, which would have taken you out. But overall, not ideal trading conditions this week on Monday and Tuesday. Leading into Wednesday, it got a little bit better. So what we saw here, I don't think that we actually had a divergence, a DXY divergence on the British pound US dollar. We only saw that we made equal highs on the DXY on this day, comparing this high to this high, and that we made higher highs on the British pound US dollar. So that's a weak divergence signal. But this weak divergence signal in combination with this bearish engulfing candlestick, the Scalper Pro changing its color from green right here to red, with a stochastic RSI crossover on that same candle, could give you that extra little piece of confidence you need to actually take this trade once the Asia highs have been taken out, to take out the Asia lows for a 2 to 1 risk reward ratio, which would have been hit very easily. So this trade would have already paid for your most recent 1 to 3 London kill zone losing trades. Okay, so now you would theoretically still be, if you only trade London kill zone, in 1% drawdown, but the market actually offered another entry opportunity right here. On this bearish engulfing candlestick, we got our stochastic RSI crossover right here, and our stop loss could have been either at the VWAP or at the most recent swing high for another 2 to 1 risk reward ratio. And now on day 3 of the week, on Wednesday, you would already be in profit by 1%. And that's all part of playing the probabilities game. It's really important. If we continue, I don't particularly trade the New York kill zone anymore on the British pound US dollar. I focus on the London kill zone because it tends to move a little bit more nicely. Not on days like Monday and Tuesday. Here we had a nice move during the New York kill zone, but which kill zone, or you basically have to decide at what times you're available to trade, and you should focus on only these times. And using, if you trade, for example, the British pound US dollar or any US dollar correlated pairs, it's always great to have your DXY on your screen. So we saw we made a total of 4% profit on Wednesday. If we're continuing, let's just ignore the price action during the New York kill zone, because we have CPI news coming up on the next day. Basically, this very volatile movement to both the upside and the downside. And up until that day, we can basically see that all that happened was a consolidation within that range that has been taken out above and below. We continued up higher, and now today we basically pumped up again above this high and continued to drop. So overall, with the major red news on the calendar on Thursday right here, not ideal trading conditions for the whole week, but still we managed to, if we only trade the London kill zone, to end up with 1% profit already. So now we continue, and on Thursday during the London kill zone, I don't trade red news days, especially in the red news days. We saw something very nice. We had a very narrow consolidation during the Asian kill zone right here, and we took out the Asian lows. We made 1, 2, 3, 4 bounces off an old support level right here. If we use those wicks as a support level, let's do it like this. We saw that we had whatever was around here, basically the VWAP that we bounced off around this level, we bounced off it again. So drawing out this support level could have been very helpful for you to actually trade this London kill zone. So prior to the London kill zone, we had a big drop already below the Asian lows. So I wouldn't be looking for shorts at this time. I would rather be focusing on longs as long as we don't break the support level right here. All right, let's continue. So we see every time we came into this area, into the support area, we rejected bullish, 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 and we wicked inside of it one more time, and then we took out the target of our Asian highs right here. Hang on, let me do that again. The Asian highs right here. So let's see if we had any divergence down here that could have helped us with this trade. Right here at this last entry opportunity, we saw we made a higher low on the Scalper Pro, and we made a lower low on the British Pound US dollar. We also saw that on the stochastic RSI, we crossed right here below the 20 level, and then we crossed again above the 50 level, indicating another bullish divergence confirmation. And now let's check it out on the DXY. On the DXY, we also made a new lower low. So this also would have been confirmation for this long entry trade. I know the stochastic RSI crossed over the 50 level right here, but yeah, it would have played out. So overall, by taking this trade, depending where you place your stop loss and everything else, you actually would have ended still up with some profits. But overall, the strategy rules include to not trade on days with major red news coming up during the New York kill zone, because usually we just see a consolidation or a continuation of this weekly consolidation right here up until Thursday. So we don't trade Thursday, we don't look at the charts. It doesn't matter what happens there. If you do, I always recommend to only paper trade on high impact news days like Thursday. And we saw that basically over that whole week, starting from Monday, we just consolidated. We took out the lows of that consolidation and the highs of that consolidation during CPI. So everyone who was in a trade around this time basically got screwed over and we finished Thursday. Now if we look at today's London kill zone, was really beautiful. First of all, we started again by taking out the Asian lows right here. So I'm marking up this level. We took out the Asian lows prior to the kill zone. We made a new move to the upside, forming a new higher high right here compared to those most recent lower highs. We pulled back to the VWAP, we retested the VWAP, and we got a bullish crossover right here on this candle. I took this trade early this morning during the London kill zone right here. Placed my stop right on the Asian lows. You could have also placed it on your VWAP, but because of spread and everything else, I placed it for a 12 pips stop loss on the Asian lows for a 2-to-1 risk to reward ratio. Very easily hit. If you would have continued trailing, you'd take profit up higher. You could have actually ended up with a higher risk to reward ratio. Just showcasing it. Now that the news are over, very nice trade. And now there's actually another example where I'm going to bring in the DXY divergence. So let's actually have a look if there's any divergence. Now we also took out the Asian lows right here during basically between the Asian kill zone and the London kill zone. So there's no divergence right here. We pulled up, pulled back, and made the continuation move higher. There was no divergence up here, no divergence here, but interestingly, we got a, hang on, let me do it again. We got a beautiful squeeze right up here with a breakout of the Scalper Pro bands. So of course this would have been a, let's say, more of a freestyle trade just by trading signals on the Scalper Pro itself, but still a valid setup. We closed below the VWAP. The stochastic RSI has basically been oversold for that whole period up until this low, until we basically would have hit our 2-to-1 risk reward ratio. But what we see at that same time, why is this breakout to the downside actually considered valid? First of all, because we changed our candle color on the Scalper Pro. It broke out bearish. We had a squeeze prior to this breakout, and most importantly, look what we take out. Look what we took out. We took out our previous day's high with those 2 wicks. Every time we wicked above it, we've got rejected. We tried it again, formed a double top M formation pattern, continued further to the downside. We pulled back up, couldn't make it, consolidated, giving us that squeeze signal on the Scalper Pro with a bearish breakout to the downside, which could have been a nice trade, but I don't trade with outside of the kill zones. I just shared it in a Telegram group for traders that maybe use the Scalper Pro in a different way. Alright, so now during the New York kill zone, we see that we tapped a low right here, that we basically bounced off this level. We're still below the VWAP, so we will see how today's New York session will play out. But overall, now recapping this week, during the London kill zone, we made a total profit of 2% right here. We also got another entry right here that hit my break-even point. So I trailed my stop loss down, and then I started to see, okay, we took out the previous day's high. This might actually not be a continuation setup further to the upside. Alright, so overall we would have made 2% during Friday's London session. We did not trade on Thursday, so we ignored the price action here. We would have made 4% on Wednesday's price action, so in total we are up 6%. We would have lost 2% on the price action during Thursday, during the London kill zone. So we are back down to 4% net profit, and we would have lost another percent right here. So overall, for this high impact news week, relatively boring price action within a very narrow range up until NFP news event. Right up here, if we zoom out a little bit, we see the range even more. So we had this massive rally on Friday. We closed Friday, we started the new week with this massive consolidation inside of this range. Been taken out by the CPI news event. So overall, we still managed to bank 3% profit for the week by just trading the 3-hour timing window from 2 AM until 5 AM New York local time. Okay guys, I hope you enjoyed watching this video and you learned a little bit more about how you can actually use the DXY and the highs and lows of the DXY, especially by comparing it to a US dollar correlated pair, like for example British pound US dollar, Euro US dollar, Australian US dollars, to trade divergences, not between a indicator that's most likely also lagging, but actually comparing two different charts that are highly correlated with each other, looking for divergences. So what you'd like to see is a higher high on the British pound US dollar, ideally above a previous day high or above a session high, like for example the Asian session high or the London session high or the New York session high, and a lower high on the DXY, if you invert the scale, of course. Because now I'm able to actually compare highs with highs because I clicked on invert scale. If you have a basic default DXY chart, you can only compare the lows with the highs on the British pound US dollar, because again, the charts are inversely correlated. So what I just see right here is that we formed also a lower low on the DXY. We formed a higher high on the British pound US dollar chart. So there's no divergence right here. That's what it usually looks like. if you don't invert your scale. But now you're actually able to compare highs with highs and lows with lows. So I really hope you enjoyed watching today's trade recap. If you did, make sure to give this video a like and also to subscribe to our YouTube channel. The link for the Scalping Pro 10-day free trial is in the description box below. And yeah, I'd say I will see you next time. And something just popped into my eye. Look at this beautiful reversal opportunity right here presented by the Scalping Pro. We had a small tick outside of our Scalping Pro deviation bands. Inside our bullish reversal zone, we've got a bullish stochastic RSI crossover, also a bullish engulfing candlestick right here on a DXY. Of course, it's inverted, so theoretically a bearish engulfing candlestick right here. But now if we zoom in on our chart, look at this nice little move to the upside right after we got our confirmation for a nice and quick scalping entry. We changed color on the next candle for 20 pips. 20 pips back up to the VWAP. Nice trading opportunity presented by the Scalping Pro reversal opportunity inside the bullish reversal zone by tapping outside of the bands and immediately going back inside of it. And just one candle afterwards, we got our bullish confirmation with the color change of the Scalping Pro with a stochastic RSI crossover right here already on this bullish engulfing candle. So very nice trading opportunity. Alright guys, take care and I will see you in the next video.